Welcome traders, my name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to our daily analytical report. We had some interesting movements recently on the market. For example, today, just a few hours ago, we had higher volatility on sterling, on a British pound. This higher volatility was caused by the Supreme Court, which said that before triggering Article 50 and before starting Brexit process, formal negotiations with European Union, government, Theresa May, needs approval, needs a vote in the parliament. So they have to agree to start the negotiations. We had a high volatility, we had an increase in volatility, but we don't have a change in the direction, right? So this information is maybe not a surprise for traders. It's in terms of the trading, it does not complicate anything, and the higher volatility was just a result of algorithms and expert advisors and high frequency trading. But now we're coming back to normal trading, and as we can see, as I will show you on the charts, traders didn't take this information as either negative or positive. Apart from that, we have strength of American dollar right now globally, even despite what candidate for new Secretary of State, Mr. Mnuchin, said about American dollar, that it's too strong and it's hurting American economy. And so despite that, despite those comments, we do have a correction on midterm correction on American dollar, and American dollar is gaining strength right now. Let me show you the calendar first before we will proceed with technical analysis. So for today we had mixed data from Eurozone, from the largest Eurozone economy, so Germany and Eurozone itself. Still to come, market manufacturing PMI from United States. As this is our first daily analytical report this week, let's see the calendar for this week, how it will look like. So we will have a pack of data from Japan, pack of data from Australia and from Germany tomorrow, along with usual data for the oil market. On Thursday, we start with New Zealand dollar and CPI from New Zealand dollar, GDP from UK, and on Friday, the most important news will be GDP from United States and probable meeting of Donald Trump and Theresa May. That in terms of the calendar. So now we can look at the charts. This is a daily chart of cable, so British pound to American dollar, and what you can see here is a clear downtrend. But in our opinion, in my opinion, we are very close to the end of this downtrend, and we are very close to the reversal. As you can see, we made a first step for the reversal. Actually, we made two steps. So as you can see, it's a double bottom formation. Also, this is a bullish engulfing candlestick pattern. Right, let me highlight that with this color, mark that with this color. So we have a double bottom formation. Second bottom is created by a bullish engulfing, which is a positive sign for buyers, and another sign is a breakout of this long-term trend line connecting recent lower highs. Right after that, as you can see for today, we do have a bit of strength of American dollar. But if we will look stronger, as I said, that's what happened when we found out the result, when we found out the conclusion from Supreme Court in UK. As you can see, a spike in the volatility because we got 100 pips movement. But to be honest with you, we started here and we were here after half an hour. All right, so not a big difference. Now we're slightly lower, but in a safe range for today. So this correction is not very strong, and in mid-term, short-term, the sentiment is positive. The price after the bounce here is making higher highs and higher lows. So it all looks positive for buyers, and we keep our bullish view on cable. Our bullish view on the cable, as is also seen here, is reflected here. Also look on a weekly chart. What do we have? The bullish engulfing on a weekly chart, on the weekly candlestick. Also double bottom formation. But here on British pound to Canadian dollar, what we are missing is a breakout of this line connecting recent lower highs. So on British pound to American dollar, we got this breakout, as you can see here, and on British pound to Canadian dollar, we still do not have this breakout, but we should get that breakout soon, because this correction is rather flat and the pressure on this level looks high. After the breakout, what we can receive here is a movement for 900 pips. So you must admit that it's a very interesting occasion, and from the technical point of view, it looks very probable upswing. Looks very probable, and the price may aim to the green area. Another instrument I have for you is Euro to Australian dollar, where we highlighted that we may be receiving another false breakout. First false breakout is marked with this purple-pink color, and it happened in the middle of December. Second one happened here after this descending triangle, resulted in a bearish breakout, which was expected, and we warned about that. We got a movement for 90 pips, but after that reversal. So this can be considered as a false breakout, and look what happened after the latest false breakout. We may be experiencing this kind of movement as well. And the closest resistance, if we take that for granted, that it's a definite false breakout, the definite false bearish breakout, the price should aim 200 pips higher to the closest resistance, and the closest resistance here is 1.3320, and is marked with a blue color here, and it's our maybe it's not our definite buy signal. We won't open a position here, but if we had to, we can see that the bullish position looks a little bit better than bearish one, because sellers had their chance. Here they wasted that. So if using price action quote, if the price does not want to go down, it will go up. Euro to American dollar benchmark for the strength of the dollar. Price is making higher highs and higher lows, so you can see the strength of the dollar is limited right now. Also, I would say that the closest support is here. We didn't even get here to this level. Price is making another correction. Let me change the color. The same correction we are having right now, short-term correction. What we are having here is on hourly chart is a bullish engulfing, so there is a probability that we will continue the upswing from now on. As I said, price is making higher highs and higher lows, which is essential for the uptrend. I would say that we have reversed gravity from this horizontal resistance as well, and the movement of the upswing for the 60 pips is very probable here, and I think that price should be here in the next few days, even if not tomorrow. Euro to Canadian dollar. Here on this instrument we can see the strength of euro. Our view on this instrument was bearish. Still technically is bearish, but it does not look so good as it did few days or weeks ago. What we are having here is a left shoulder, head and right shoulder and a breakout of a neckline. Neckline here is highlighted with this black line. Also, we went below horizontal support and marked with a blue color, and from the technical point of view, everything looked great for a downswing. We went lower, we retraced, we tested that resistance with a shooting star. Everything looked perfect for the short positions. After the shooting star, we went 250 pips lower, and that was it. Price created a pennant. Pennant is a trend continuation pattern, so we were seeing a downswing here according to the technical analysis, but it didn't work, and the price broke the upper line of the pennant and is now and the price is now pushing this horizontal resistance created by marked with this blue color. Even with the daily candlestick from yesterday, which is a beautiful shooting star, as you can see, traders do not follow the signal, and the pressure on this level is high. So it looks like we will have a breakout here. So far it is still too early to say if we will have a breakout or defense, because very often you can receive two shooting stars in a row, two hammers in a row. So even if the price will go here in the next hour, there will be a probability that the price will be rejected from this level, and the candlestick will create a long head. So, to sum up, we have different possibilities here. What traders should do is to bet on probability. With this retracement, the probability of a further upswing is the same as for the downswing. So if it's 50-50, trend followers and traders who focus on finding trades with the best probability stay away from the market, because now it's more or less 50-50. I would be more bearish if the price went lower today after the shooting star, because that would mean that this resistance works. But as you can see, we don't have a downswing, so this resistance is questionable at the moment. It would look great if after yesterday candle we would have a nice upswing for about at least 50 pips. But now the price is advancing higher and questions this level as a strong resistance. Australian dollar to American dollar. That's an interesting situation. On Friday I was telling you about this upswing here. This upswing here, and it happened. Why? We predicted that the price from this point will go up. we had three factors here. So, first of all, the trend line. Trend line marked with the black color, prices making higher highs and higher lows. We touched this, this level was created here. 1, 2, 3, 4. 4 contacts. Also, we had the horizontal support marked with green color, created by supports from October, November, after the breakout, resistance from December and January. Right, so both of those supports, trend line and horizontal support, were relevant, were important, were crucial. But wait, and there is more. Not only those two factors, but also correction equality. This movement, 80 pips. This, 70. This one, 70. How about this one? 75. And how about this one? 70. Right? Correction equality movement. 1, 2, 3, 4, 5. So 3 strong bullish factors presented on one price, exactly here. Also, if you would like to look a little bit closer, what do we have here? 2 pin bars. Second one is a beautiful hammer. So we can see that there was actually a bullish reaction. So price tested this level and got rejected. And so the long tail was created. Very technical situation. So we're not surprised with the 90 pips upswing. I highlighted another potential correction equality movement for 70 pips. So far the price made 55 and it looks like they will try to pull the price further. So maybe we won't experience another correction equality, another correction for 70 pips. But generally, it was a great setup on Friday. It worked, and we are very happy that we warned our traders about that, both on Daily Analytical Report, on Trading Sniper, and on our Twitter account, right? Well, we were not extremely happy because it's not a surprise, and it happens very often that we're ahead of the market and we're telling you about the good trading setups before they will happen. So it's nothing extraordinary, but it's always good to support our traders with such a decent trading occasions. If I'm talking about Australian dollar, let me show you also gold. Why is that? Because there is a huge correlation between Australian dollar and gold. What happens here is we stopped on 38.2% retracement of this downtrend, and we said that it will be a resistance. And what we are having here is a correction equality pattern. Again, with this correction, right? You just cannot make that up. Actually, all right. And what we are having now is an ascending triangle. Ascending triangle in an uptrend gives you a higher chance for a breakout. So this is our scenario. If it won't happen now, maybe it will happen later. Why ascending triangle is a bullish signal? The price meets resistance, horizontal resistance. Tries to break, but they don't have enough power, so the price retraced. But the uptrend is still alive, so the price is making higher lows. They try to break this level again, but everybody knows that there is a resistance, so there is a retracement, but retracement is lower again, right? So the pressure increases and the amount of the sell orders on that resistance decreases. Number of investors that believe that the price will bounce from this level decrease, because those bounces are not so strong as for the first time. So it shows that the pressure rises, and finally there won't be anyone willing to sell here, only buyers, and the price will crash this level. That's what usually happens with ascending triangles. So what we are seeing here is the price aiming higher, but definite buy signal will be created after the price will get here, right? Touching this red line should activate the buy signal. New Zealand dollar to American dollar. Why I would like to show you that is because here ascending triangle happened. We even wrote the analysis about that to a Polish version of investing.com, a huge investing portal. We were somewhere here, and we said that the bullish upswing is more probable because of the ascending triangle here, and it happened. And from price action principle is that broken resistance becomes support. That was a resistance here. 0.7215 was a resistance once, twice, 3, 4 times after the breakout. It's positively tested as a support, so buy signal is still alive here, but that's a mid-term, short-term situation. I need to explain your situation in the long term. What we're having here is a downtrend, and that looked only like a correction, right? There was a huge downtrend from July 2014 to August 2015, over a year. And then price created, was that a flag? Also, we had the horizontal support here, which was positively tested as a resistance. I need to change colors, bear with me. Okay. We also defended 50% Fibonacci level, so it looked like a decent sell occasion. It just looked like a flag. This breakout highlighted with yellow color also breaking this support. It looks very strong, it looks legitimate. This area highlighted by yellow color before we got a retracement looked like a very strong sell signal, but it is highlighted by yellow color by the reason because now it's a typical false breakout, right? So price went higher, they didn't want to go lower. Resistance, this lower orange area is supposed to be a resistance, but it got broken, so it became a support. The price also broke this lower line of the flag and went back inside again. So this movement is a false breakout, and this movement, maybe let me use the other color. This movement ends the downswing and starts the upswing. So after that, as you can see from here, we start a sequence of higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and it should continue at least to this resistance here, 110 pips. Also on H4, nice hammers. So from this, that's a very good buy signal here now on Kiwi. Right, if you're looking for good, obviously we cannot recommend you anything. We are not in a position for recommendations. But if you are looking for a decent setup, a good looking technical situation on the market, New Zealand dollar to American dollar is the one. Even if we connect those two lines, it won't be a resistance for the next 50 pips. So still you have a space for a movement. And traditionally, let me show you one index, one commodity, or energy commodity. Index will be DAX. Unfortunately, on indexes, what do we have as a boring side trend, an upswing, and a boring side trend again. Right, and actually that will be the resistance, that will be the support. Those are just false breakouts. One is here, bullish breakout. One is here, bearish breakout. And the price stays inside of a sideways trend, which is absolutely boring and not interesting to watch. We just have to wait for a final decision here and a final movement. A bit more interesting situation is on oil. What do we have here is Brent, and we have at the same time we have bullish and bearish setup. Bearish setup is a trend, is a head and shoulder pattern. Left shoulder, head, right shoulder. But we are still above the neckline, which is this line. We are still above horizontal support on $53.7 per barrel. For the bearish signs, what do we have is a head and shoulder pattern, but it's not active yet, as we require to break those supports. And another bearish factor here is breaking the trend line, but also it's not very strong signal, because this trend line was very steep, and after the breakout we didn't even retrace 38.2 Fibonacci level. So again, bearish signals, head and shoulder formation, which is not yet active, and the breakout of a trend line which was steep. From bullish signs, what do we have here is a pennant with those red lines. Lower red line is in the same time a lower line of the pennant, but also a neckline. So from the bullish signs we have this trend continuation pattern, which is a pennant, and the price is still present above the horizontal support on 53.7, which I mentioned before, and the price is still above 38.2 Fibonacci level, which usually is a big deal. And as long as the price stays above 38.2 Fibonacci level, the sentiment is bullish. Right, so in the same time we have two situations. What are we waiting for? Is a breakout of this resistance that will create a buy signal. So if the price will be here, we will have buy signal, and if the price will be here, we will have sell signal. So again, we are showing you the situation that will happen. We are giving you heads up before. We are not analyzing the history and telling you that, oh, there was a great occasion to do that 2 weeks ago, because nobody's interested in this kind of setups. You want to know about the trade before it will be a trade, and that's what we are doing. Now we spotted a nice side trend on Brent oil. This side trend is nice because there is a high chance for a breakout movement and a continuation of this breakout movement, which should bring nice profits to traders who will catch this movement from the very beginning. So patient traders wait for a nice occasion on the Brent oil. Thank you very much for attending daily analytical report. We had decent occasions, for example, oil for a pending order, and one of the best occasions for now for me is New Zealand dollar to American dollar. Okay, thanks very much. Remember to follow us on Twitter and our website alpari.news. Bye.